Stacy Higginbotham with GigaOM, and I'm here with Mike Maples, a Texas rancher and an angel investor and former Microsoft employee, talking about the future of the venture industry. Hi, Mike.
Hi, how you doing?
I'm doing well. Thanks for doing this. I'd love to talk to you about how much capital is in the venture capital industry right now, and what you think that's going to look like in the next few years as general partners, limited partners, start to look at the performance of their funds.
Well, there's billions and billions and billions in the industry. Way too much. A lot of pension funds and other kinds of funds have wanted to get in the game. They've thrown money at the venture companies, and now the venture companies are raising funds in the $500 to $1 billion. It makes it very difficult to invest in startups. The return on $1 million just isn't enough to influence the outcome of a $500 billion fund. So I think the whole industry will reconsolidate and reform. I don't know how. I think we see a case where more and more startups are raising less and less money, and the venture businesses are raising bigger and bigger funds, and so they're having to turn to leverage buyouts and other uses of those funds and not really forming the startups. And so we need to rethink about where does capital come from for startups.
And where do you think, if you're trying to find capital today, where do you advise startups to go, or what do you advise them to do?
I think that there are several ideas that are worth pursuing. One idea is to find somebody who is interested in what you're doing, not for the financial return, but for their own business. In other words, large companies who may want to fund research in certain areas, but just don't want to have the hassle and overhead of trying to do it themselves. There's the idea of pre-selling your product. In other words, taking selling 5 years worth of your product for a fixed price up front. There's the idea of finding friends and family or angel investors who are willing to put a little bit of money in and who are willing to take returns over the long term in terms of cash flow instead of some type of an exit strategy like a sell or going public or whatever.
And you mentioned some interesting things about exit strategies, talking about there are no real exit strategies today. What do you think a business should be prepared to do?
Well, there's always exit strategies, but most companies that get started aren't in the business of trying to figure out how to get out of business. They're in the business of figuring out how to grow their business and pay back their investors and their employees over a very long period of time. It's only the tech businesses that decided that in 2 or 3 years, if they couldn't roll it and go public or sell it to somebody else, that it was not a good exit strategy. I think that those times are past, that more and more business will be started and managed and run for the long term. And about the only exit strategy other than that is selling to a big company who has better facilities for developing and or distributing the product.
Okay. And you also had mentioned how many current large companies in the tech industry had actually raised venture capital.
This is old data. This is a few-year-old data. But if you look at companies that have sales of $1 billion, virtually none of them raised funds unless they did it at the very end just as a way to expand. They didn't raise funds to start the companies. If you go down to companies that are 400 million or greater in revenues, a very small percentage, much less than a third, ever raised startup money from venture businesses. The wild-eyed entrepreneur figures a way out without raising money from VC.
All right. Well, thank you very much. Anything else you want to share?
No, it's been great.
All
Good
right.
seeing you.